Welcome back to the deep dive. We are taking an intensive look into the engine room of Ford Motor Company, really focusing on their third quarter financial results for 2025.
Yeah, and we're using the 10Q filing and their public releases as our guide here.
Right, so our goal today isn't just to rattle off numbers. We want to really unpack them for you.
Exactly. We need to dissect how Ford's three big segments, Ford Blue, Model E, and Ford Pro, are doing. They're quite different.
And we also need to understand the major headwinds they're facing. Things like tariffs and that big novelist fire disruption.
Absolutely critical context.
Okay, so let's start high level. Q3 2025, what's the big picture?
Well, record revenue, for starters, hit $50.5 billion. That's up a solid 9% from last year.
Wow, $50.5 billion. That's massive. And how did that translate to profit and cash?
Pretty well on the surface. JAP net income was $2.4 billion, and the operating cash flow looked really strong at $7.4 billion.
Okay, $7.4 billion operating cash flow, so generating serious cash.
Definitely generating cash. But, as always, the adjustments and the details tell a more interesting story.
Right. Let's get into that core profitability number then. Adjusted EBIT. It came in at $2.6 billion for the quarter.
Correct. $2.6 billion.
Now, looking at that headline figure, it seems basically flat compared to last year. So I guess my question is, why is a flat number even that interesting?
Because that $2.6 billion figure is, well, it's kind of misleading if you just take it at face value.
How so?
The key thing you absolutely need to understand is that this number includes a huge hit from tariffs. We're talking a $0.7 billion adverse impact just from net tariffs in Q3.
Hang on, $700 million. So are they just saying ignore this cost because it's external? Is that like standard?
It is pretty standard when you're dealing with specific, non-operational things like trade policy changes. And if you do that adjustment, if you strip out that $700 million geopolitical headwind,
Then what happens?
then the underlying operational performance actually showed a strong improvement, about $7.7 billion better year over year.
I see. So instead of being flat, the core business actually accelerated by what, roughly 25%?
Exactly. The geopolitics acted like a brake. It wasn't an internal stumble on operations.
Okay, that paints a very different picture. Now, speaking of surprising figures, let's talk taxes. This was maybe the biggest shocker in the report.
Oh, yeah?
The GAAP effective tax rate for Q3. It was negative 34.7%. Negative.
That is. Yeah, that's a massive outlier. A negative rate like that means they were essentially getting tax credits, not paying taxes for the quarter.
How does that even happen? What drove that?
The main reason was a net benefit of $1.4 billion. And this came from releasing something called a valuation allowance.
Okay, valuation allowance. Sounds like pure accounting speak. Can you break that down?
Sure. Think of it like this. Ford had piled up losses in places like South America over the years. These losses create tax credits, but Ford couldn't really count on using them because, well, they didn't expect to make profits there.
Right. So they set aside a reserve and allowance.
Precisely. By releasing that allowance now, Ford is basically signaling, hey, our South American operations have improved so much, we actually think we will be profitable enough there in the future to use these old tax credits.
So it's a sign of real operational improvement in a region that used to struggle.
Exactly. It's cleaning up the books because the underlying business got better there, a real turnaround story driving an accounting benefit.
Interesting. And that big benefit helped offset another tax issue, didn't it?
It did, yeah. It was partially offset by a non-cash charge, about $424 million related to new tax laws over in Germany.
So managing global operations means managing global tax complexities too. Lots of moving parts.
Absolutely. And that complexity leads us nicely into their segment strategy. Ford Blue, Model E, Pro, the results are really night and day between them.
Okay, let's start with the winner, Ford Pro, the commercial segment. This seems to be the profit machine right now.
Oh, it absolutely is. Ford Pro pulled in almost $2 billion in EBIT for Q3, $1,985 million to be exact.
Wow. And the margin.
Really healthy, 11.4% EBIT margin. And they got there through, well, just solid execution. Wholesales were up 9%. Exchange rates helped, even though fleet pricing was a bit of a headwind.
But it's not just selling trucks and vans, is it? There's a service angle developing there too.
That's a key part of the story. Their paid software subscriptions are growing, up 8%. Just from the previous quarter, they now have over 818,000 subscribers.
818,000. So it's becoming a recurring revenue stream. Sticky.
Very sticky. Now contrast that with Ford Blue. That's the traditional ICE and hybrid business.
How did Blue do?
Still profitable, $1,540 million in EBIT. But that was actually Down slightly, about $84 million from last year. The margin was 5.5%.
Okay, 5.5%. Revenue grew faster than units sold, so pricing seems okay. Why the lower profit then?
Mainly higher costs overall, and a big chunk of that was, you guessed it, those tariffs we talked about, plus some adverse currency exchange.
So tariffs hitting Blue the hardest.
It seems that way, but here's the important nuance. Management specifically said that costs excluding tariffs actually improved year over year. They're making progress on material costs, warranty costs, those kinds of things.
Okay, so Blue is fighting operationally, but bearing the brunt of those external costs. Got it.
Exactly. And then there's Ford Model E, the electric vehicle segment.
Ah, yes. The investment phase, or maybe the investment sinkhole, depending on your perspective.
Well, the numbers are pretty stark right now. Model E lost $1.41 billion in EBIT in Q3. That loss actually got bigger by about $179 million compared to last year.
$1.4 billion loss.
Yeah.
What does that look like as a margin?
It's pretty painful. Negative 79.1%, minus 79%.
Ouch. But they are selling more EVs, aren't they?
They are. That's the other side of the coin. Wholesales were up significantly, 57% year over year, driven by new products in Europe, like the Puma Jenny and the Capri, plus more F-150 Lightnings here in North America.
So growth is happening, but the losses are widening. What's causing that?
Two main things highlighted. First, adverse net pricing. That suggests they're having to discount or spend more on incentives to move those EVs, probably due to competition.
A price war, basically.
Seems like it. And second, there was a big one-time charge related to the changeover at the Louisville assembly plant. That hit the other expense line but impacted the Model E result. It's the cost of retooling for the future.
Right.
And those retooling costs bring us directly to the big challenges shaping their outlook for the rest of 2025. There are some major external hits they're dealing with.
Okay, let's tick through them. First up, that Novelist fire. Big supply chain problem.
Huge problem. Ford is now saying they expect an adjusted EBIT headwind of $1.5 billion to $2.0 billion for the full year just from this fire.
1.5 to 2 billion. Wow, and it's hitting cash flow too, right?
Yeah, they mentioned an oversized short-term hit to working capital, so immediate cash stress. That part should reverse in 2026, but it hurts now.
Are they just taking the hit or are they fighting back?
They're fighting back. They announced plans to add up to 1,000 jobs to boost F-Series production, trying to make up for lost volume and meet demand.
Okay.
And they're also aiming to mitigate at least $1 billion of that Novelty's EBIT headwind next year in 2026. So, clear action plan.
Good. What's the next headwind? Tariffs again.
Yep, tariffs. But here, the news is actually a bit better.
Oh, how so?
They revised their full-year forecast for the net tariff impact down. They now expect it to be about a $1.0 billion headwind for 2025. That's down from the $2.0 billion they were projecting before.
Okay, so $1 billion improvement in the tariff outlook. Why the change?
It sounds like they secured more preferential tariff treatment and found some import adjustment offsets, basically navigating the rules better.
And didn't you mention something about getting cash back?
That's right. Buried in the details, Ford actually has a receivable on its books for about $1 billion. That's for
Yes.
tariffs they've already paid but are expecting to get refunded.
Potential cash inflow down the line. Interesting. What's the third major headwind?
This one's internal, sort of. It's the cost of adjusting their EV strategy. They've been canceling or delaying programs.
Right, like that big 3-row electric SUV.
Exactly. And those cancellations cost money. They've already booked $1.6 billion in expenses related to these actions through the first 3 quarters of 2025.
And there's more to come.
Looks like it. They're expecting up to another $1.8 billion in additional expenses and cash spending related to these EV program changes in the future. These are being treated as special items, though.
So massive costs involved in pivoting that EV plan. Real money.
It really highlights how quickly they're trying to adjust investment to match what consumers are actually buying right now, even if it means taking big write-offs.
Okay, so you've got novellas, tariffs, EV restructuring, big hits. Despite all that, how's the full-year guidance looking?
They actually maintained it, still guiding for adjusted EBIT between $6.0 billion and $6.5 billion for the full year 2025.
Wow, how are they managing that?
A big part of it relies on hitting about $1 billion in net cost improvements, excluding tariffs. So intense focus on internal cost cutting is really crucial for them to make those numbers.
Given all these pressures, the disruptions, the restructuring costs, how's the balance sheet looking? Do they have enough cash, enough liquidity?
Oh, yeah, they are maintaining a very, very strong cushion. Total company cash, and this excludes Ford Credit, was sitting at $32.9 billion at the end of Q3.
$32.9 billion in cash.
And total liquidity, again excluding Ford Credit, was $54.0 billion. Their target is to keep company cash above $20 billion, plus have significant extra liquidity, so they're well above that.
Plenty of buffer then. Okay, what about Ford Credit, the financing arm, usually a steady performer?
It was pretty steady in Q3. Earnings before taxes came in at $631 million, which was actually up 16% year over year, so good profit contribution.
But are there any signs of stress in the loan portfolio? You hear things about the consumer?
There are some signs, yes, particularly in the U.S. retail financing side. The loss to receivables ratio, or LTR, it ticked up slightly by 5 basis points to 62 basis points.
What does that mean in plain English?
It means they're seeing slightly higher losses, both because cars are worth less when repossessed, and they're having to repossess a few more. It's not alarming yet, but it reflects that tightening consumer credit environment we're hearing about.
Okay, something to watch. And leverage looks okay.
Yeah, Ford credit leverage was 9.5 to 1, which is right within their target range.
I also saw a note about a charge related to a UK regulatory review.
Yes, a non-recurring charge. It seems like there's an industry-wide review by the UK's Financial Conduct Authority looking into how dealer commissions were used historically. So another external factor hitting the credit side, similar to tariffs hitting manufacturing.
Right, okay, another area, pensions. Often a big liability. How's that looking?
Actually, another bright spot here, the total global pension status has improved quite a bit. It swung from being slightly underfunded at the end of 2024 to being net overfunded by $0.4 billion as of September 30th.
Overfunded, that's good news. Takes a potential liability off the table.
Definitely reduces risk on the balance sheet.
Okay, finally, let's touch on something that could have been a massive overhang. Litigation. There were those huge product liability cases.
Yes, the Hill v. Ford and Brogdon v. Ford cases. You might remember these had enormous punitive damage awards attached previously. We're talking combined over $4.2 billion.
$4.2 billion hanging over them. That's a scary number. What happened?
Well, big news in Q3. Both cases were actually dismissed in September.
Dismissed? How?
They reached confidential settlements with the plaintiffs. The details aren't public, but the bottom line is those massive potential liabilities are gone.
Wow. So that $4.2 billion potential hit just evaporated.
Essentially, yes. From an investor's standpoint, getting rid of that huge legal uncertainty is arguably one of the biggest non-operational wins of the quarter. Provides a lot more clarity and de-risks the balance sheet significantly. Hashtag outro.
Okay, so we've covered a lot of ground here, from the core profit drivers to these massive external shocks. If you had to boil down Ford's Q3 performance into, say, 3 key takeaways, what would they be?
Okay, 3 things. First, Ford Pro is absolutely the profit powerhouse right now. High margins, strong performance, and crucially, growing that recurring digital service revenue. It's funding the transition.
Right, the engine.
Second, Model E is deep in the investment phase. It's losing significant money per vehicle, yes, but it is achieving essential volume growth. And maybe more importantly, they're actively adjusting the strategy, cutting costs where needed, even if it's painful short term.
Okay, investment and adjustment.
And third, the company is demonstrating it can actively manage and mitigate huge, specific external hits. Things like the Novelist fire, the tariff costs, the EV pivot expenses. They're not just letting these things happen to them. They're actively responding.
Defense and investment happening at the same time. It's quite the juggling act.
It really is.
And that brings us back to something you mentioned right near the start, that surprising $1.4 billion tax benefit driven by the turnaround in South America.
Right, the valuation allowance release.
So thinking about that specific geographic win and then contrasting it with all the restructuring costs and adjustments still happening in places like Europe and North America, it raises a final thought for you, our listener. What does this unexpected positive news out of South America, combined with the ongoing struggles elsewhere, tell you about where Ford might be prioritizing profitability and perhaps where the next major growth story could emerge from outside of that core U.S. truck market? Something to think about.